What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is October 12th of 2022. We did end up getting the PPI data today, so let's dive in and let's see what happened as a result. The S&P 500, it finished down 0.33% as measured by the SPY. The NASDAQ QQQ finished down 0.03%, essentially flat. The IWM small caps down 0.27%. Our dogs of the Dow down just 0.04%. Our ARK Innovation ETF actually finished positive today at 1.32%, and bonds finally caught a bid up 0.49%. Volatility was basically flat across all these indices. We had some mixed breadth, 44% advancers in the small caps, 44.6% up volume. The trend model does remain at a -3. Now let's talk about today's economic data. The PPI was the big number, right? And the PPI, heading into this event, we had really negative sentiment. Everyone was talking about, oh my gosh, this is going to crash the market. And what ended up happening, we had a 0.4% month-over-month increase in the PPI for September against the consensus reading of 0.2%. So this came in above the expectations. And then our core PPI came in line with expectations. It came in at plus 0.3%. Now, when I saw this number come out, I saw that it was above the expectations. I was like, all right, all bets are off. You know, the worst case scenario might unfold. And to get a pretty much flat day in the market, bonds bid, ARK Innovation ETF bid, that is definitely, a good development. It could have been a lot worse. For context, this is the PPI year over year. We can see what it is doing. Good news is it is trending lower, which is great. But the month-over-month reading, we did have two negative reports in a row. This report actually was an acceleration. So we do not have any decisive evidence that inflation has, really, that this issue has resolved itself. Let's put it that way. Now, incoming data, we are getting the CPI tomorrow. It does appear that investors are saying, oh, the CPI is even more important. To me, it's kind of like we had two hurdles to clear, the PPI as well as the CPI. And with the VIX this elevated, it's basically the crash window is right open. So the way I see it, we got past one hurdle, but we still have another hurdle tomorrow. So for core inflation year over year, the consensus estimate is for 6.5%. For the non-core inflation year over year, estimate is 8.1%. And then for core month over month, the market is expecting a 0.5% increase. So even if we do get month over month increase, the market's already baked that into the cake. We mentioned yesterday, the market could really be pricing in these hot inflation prints. And I think we saw that today. Even though the PPI came in hot, market didn't really do a whole lot. We have initial jobless claims that are set to come out as well. And remember, we're in this bad news is good news economy. I would imagine that these initial jobless claims coming above the estimate, the market will react kindly to that and vice versa. So definitely going to be a huge day. Just in terms of news that we saw, we also got the Fed minutes today. And this is, in the minutes, I didn't really see anything that was new in there. We've had so many Fed speakers that have been, shooting their shot, saying their piece for the last couple days. And honestly, it's nothing new. Kashkari, this is a quote, "We haven't seen much evidence the underlying inflation is easing. The Fed will raise rates to perhaps 4.5% and then stay there for a while as it assesses the economy." Now, here's the kicker. We have almost a 100% probability that we're going to get a 75 basis point rate hike in November. If we were to get 75 bips in November, another 75 in December, that brings us to 4.5. And if the Fed is going to stay there for a while, as they said, the market has pretty much already priced that in. I think the reason why the market has been so horrible over the past couple months is because the market had to adjust to incremental hikes that were not originally being priced in by the Fed or really just being spoken about by the Fed. So the market had to play catch up. Now it does appear that barring some crazy event, the market is essentially caught up with the Fed. But we'll have to see if the data, gets much worse, then perhaps that changes. VIX futures term structure is still inverted, but it did come down just a smidge from yesterday, which is good. Finviz heat map, we had a mixed board. I want to point out the utilities. These things got absolutely demolished today. And the more and more I look at this, the more and more I'm beginning to believe that like this particular inning of the sell-off, like the last, 5 days of price action or whatever it is, I don't think it's even players going, oh yeah, I'm still adjusting to the fact that inflation is going to be higher for longer, so I'm going to go ahead and sell some of these equities. I think we've just been in like a liquidation spiral, a de-risking spiral, a degrossing spiral. And when I show you the utilities chart, I think you're going to understand what I mean. In terms of sectors, we did have some bright spots. Blockchain was bid, Arc Genomics was bid, Arc Innovation ETF, utilities, energy. Other than that, still pretty weak across the board. The utility stocks were actually our worst performers. And then solar as well. And if we remember, solar was showing relative strength for so long. So it really just seems like, hey, solar stocks are probably like the only thing everyone was remaining long. And now they're just getting liquidated out of those positions as well. Same thing with utilities. And then for style factors, wow, that's interesting. I didn't even realize that's at the end of the day. High beta was the only style factor that finished green. But let's look at this utilities chart, and then we will go into the S&P 500. The utilities, oh my Lanta. Look at how bad this has been. Since mid-September, this utilities ETF, oh my gosh, this thing, 7.8 would be about 10%. Close to 16 would be, this thing's down over 20% in about a month. So that is a huge move for utilities. If you look at the IV percentile for utilities, it's in the 99th percentile. And the realized vol, these are some scripts that I actually just added. And that's why this video is coming out a little bit later than normal. The 10-day realized vol is 37.6%. That is absolutely huge. We did take out a downside VPOC. So I know there's investors out there. This is like the chorus, what they're all saying, like, but there's been no panic in the market. And it's like, it's just becoming more and more blatantly obvious. Like, we're in literally a liquidation event in the market. Like, to say there's no panic here, or there's no like forced selling, there's no capitulation. Like, to me, that is just mind boggling. Because if I pull this up on TradingView, let me see, I'll just show you, and I posted this earlier on Twitter. Take a look at this. So this red pane down here, this is showing us the distance from the 50-day simple moving average. Right now, the utilities ETF, it is about 10.5% down from the 50-day simple moving average, which is this blue line. The last time we got that oversold from the 50-day SMA was literally the COVID crash. So, I mean, it does seem like, I think a lot of people are saying like, oh yeah, this is a market correction. It could get a lot worse. But when we look at the reality of the situation, we just had a sovereign debt crisis, which is the UK pension system going belly up. And, their currency also going belly up. So we have a sovereign debt crisis. And then we have, just a global liquidation event. So, yeah, this is another 2018, 2019 event. This is another COVID crash. We are in the heart of it right now. Now, I think the big question is, that being said, are investors positioned for a hot CPI? Yes. Everyone has pretty much liquidated everything. If you look at like the CFTC, like commitment futures traders report, speculators, they're short every single index already. Everyone's long put options. Like, yeah, if we get a hot CPI report, like my expectation is unless this thing comes out just like so mind-bogglingly hot, I don't really think we're going to get a big move to the downside. But that being said, like if we're just still in a global liquidation spiral, like honestly, I feel like the CPI like doesn't even matter. If it's just like investors are still selling, like they're still selling. But I do think there's some asymmetry to the upside. I know I've been saying that for a while. But I think at a certain point, like, I think the PPI really told the story today. Like, the PPI came in above the expectations, and, the ARK Innovation ETF was ripping to the upside. But yeah, the S&P 500, technically we are on the precipice. Like, this could be one of those moments where it's like, we're just creeping lower, and then we get the report, and then it's just like, blah, and it, just moves to the downside. I think there's so many potential negative catalysts. If we get any sort of escalation of the Russian-Ukraine conflict, that could happen. It's honestly just like, is another shoe going to drop? We're pretty much like right on the ledge. If that next shoe drops, that could be what brings us lower. But barring any incremental bad news, I mean, I don't think the CPI is going to be news to anyone. Like, oh yeah, inflation's hot? Like, we had no idea. So yeah, I think the bias, I wouldn't be surprised if we get a pretty nice bounce tomorrow in the market. And for the S&P 500 as well, the 10-day realized volatility is very high because we had this massive 2-day bounce. That's upside volatility, right? And then we had this massive 3 or 4 day plunge of 5%. So the realized vol is just through the roof. Even if we were to just get more sideways movement, that would actually be bullish for the market because that 10-day realized volatility is going to start to drop. And then there will be more systematic investors that dip their toes in the pool. But we've just had like the mother of all corrective sequences, like tail risk events, and yeah, I think things could be a lot worse given this PPI report we got today. NASDAQ, it's up a little bit in the after hours. We do have this VPOC down here at 10,563. Have to be cognizant of that. It's there. It's pretty much in no man's land at the moment. And where is NASDAQ volatility? Yeah, it's at almost a 40. So this thing is getting crazy. I mean, if we look at some of these NASDAQ stocks like Tesla, people saying like, yeah, but there's been no panic. Like, oh my gosh, look at what Tesla just did over the past 2 weeks, 3 weeks. This isn't like a natural move. This is, people getting liquidated out of a lot of different assets. Let's take a look at the Russell 2000. The Russell 2000 has been showing some relative strength, shockingly. Look at this. We're just kind of putting in a sideways doji for a little bit. And I think this one, if we get any sort of relief, we could find ourselves trading right back inside of this monthly value area. We also have this 20-day simple moving average, which is catching down to price. And of course, we've got our dogs of the Dow. This thing just doing its thing, also moving sideways. We've got the ARK Innovation ETF, which had an incremental blowout over the past 3 days. It looked like, yeah, we were starting to move to the upside, whatever, but then it's crazy how just 3 days can really take you, down over 10% in this case. But it is very interesting. These two red lines, these are the prior lows from the summer. Look at this. One was in June, one was in May. And we've undercut those levels 2 days in a row, but we have not closed below them. And again, I keep saying this over and over. We got a hot inflation report, and ARK finished positive. So that just shows like the market's in position for hot inflation reports, and we're actually even getting some relief after we get those hot inflation reports. So I am pretty optimistic that I think no matter what the CPI number comes out to be tomorrow, we could see, a shocking bounce in ARK where everyone's like, how did that happen? And, it's the same thing. The volatility works both ways. You know what I mean? If we have a crazy 3-day move to the downside, who's to say we can't see something similar to the upside? Crude oil did start coming down today. It's been on like a 3-day skid, which is good. We really need that. Crude oil, look at this, 3-day pullback. We'll take it for now. The big canary in the coal mine, this is really what you have to be watching for tomorrow, is the dollar index. The dollar index basically finished out flat today. Thank heavens after that hot report. Tomorrow, if we get the CPI, no matter what it comes out at, if you see any sort of weakness in the dollar, that's a good sign. If you see that the dollar's bid, that is not good. The dollar index could be like the only chart you have on your screen, and you're probably going to do fine. If you just say dollar up bad, dollar down is good. So tomorrow, I think it's going to be another adventure, team. Never a dull moment. This is basically like a page-turning novel, the way that this market is unfolding. So best of luck out there, everyone, and we will see you all tomorrow.